The local bourse is firmer in midday trade, but investors are still concerned that last week's violence continues to cloud the economic outlook for South Africa. South Africa's rand remains flat amid the central bank suggesting monetary policy was likely to stay accommodative for a long time, and jobless claims data in the United States deterred risk-taking. Matete Tulare, who is head of foreign exchange at Rand Merchant Bank, will talk through these as well as other market-moving stories. And Dr. Tulare, good to have you with us this afternoon. Now, the Rand has continued to weaken after the Reserve Bank's MPC announcement, where concerns remain about South Africa's economic stability. If you could take us through what the feeling is regarding the decline in the local currency.
Hi, Tammy. It's been a very interesting couple of days. I think the Rand has fell about close to 1.5%, and we're actually headed for the lowest level since March. I think it's been a combination of factors with regards to the Fed, the obvious local unrest, and obviously the SARB meeting that happened yesterday. That's been three hits to the local Rand market in the past 5 weeks. We've actually seen the Rand drop, for the second week now of declines, and obviously this is after the Reserve Bank yesterday left interest rates unchanged at 3.5%, and they've obviously signaled a more dovish policy path for the next 18 months. And I think Mr. Chahanyago obviously yesterday citing protected vaccine rollouts, the economic effect of the COVID-19 lockdowns that we've seen, and also the damaging riots as risk factors to the economy. And then if you just couple this with obviously the 32% plus unemployment rate and also the estimated 150,000 jobs that are put at risk following the unrest last week, that obviously is going to have a negative effect in sentiment and confidence in the local market, and hence we've seen the Rand weaken to around these 14.77 levels. But also on the back of that, for the past 3 months, we've seen the Rand, losing about 3%, and obviously on a year-to-date basis, we are about 0.5% weaker.
Now, oil fell further below the $74 a barrel today. Take us through the developments there.
So look, commodities has actually been quite an interesting one. I think what you're also just seeing besides also the oil market is the gold price. I mean, gold has obviously steadied as, the market is obviously weighing what's happening from a Fed perspective, what's happening from an ECB perspective. And we've also seen gold heading for its first weekly decline since the middle of June, with a lot of the market focus being on the global recovery following the pandemic, and obviously the outlook of stimulus, with all the market attention will be on the Fed's policy meeting next week on the 27th and 28th of July, when they are potentially going to talk about the appropriate timing of the tapering. We've also seen gold prices being whipsawed around the $1,800 mark, and obviously this is also after a dovish measure by the ECB yesterday. Look, I think for commodity markets, it's going to be quite an interesting week next week, as we've got a huge slate of earnings from mining, energy and crop giants next week. I think the diary includes things like Rio Tinto and Vale, which are going to release some of their results next week. And obviously this will also have an impact on the oil price. So it is going to be quite interesting to see how that fares next week.
Now, Distell expects up to 20% rise in full-year profits. The drinks maker has taken a knock due to yet another ban, a fourth ban for them on the liquor trade. Do you think that this will continue to impact numbers?
So look, I think Distell has been obviously, having a tough time, especially with the on and off lockdowns. But nonetheless, remember that it is South Africa's biggest wine exporter, and it is also a takeover target for Heineken. And they've actually reported an increased revenue outside of the South African market. It has said that their international business obviously expanded as they obviously boosted their online sales and raised the margins, especially in the premium whiskey brands. And I think the sales for this segment is expected to rise about 10% from a year earlier, with margins also improving compared to pre-COVID levels. They have been led by the likes of Mozambique, Nigeria, Ghana, Zambia. All the units outside South Africa gained And from a corporate perspective, we know that Heineken, which is the world's second largest brewer, in May they said that they are in talks with Distell about a possible acquisition of most of its businesses. We do know that the talks are still continuing, and they have said that, the local unit has taken a knock, especially with the liquor bans, which are obviously aimed at reducing the alcohol-related cases at trauma wards and obviously help hospitals cope with the surge in the coronavirus infections. But nonetheless, they also have noted the fact that, the fourth, lockdown that was imposed in the latter part of June has, impacted their operating profit by around 30 million rands. And also, over and above that, the riots that we saw in the country last week also dealt them a blow, obviously placing, damage at around 100 million rand. So, but nonetheless, I think all in all, 10% in terms of, revenue increase is not such a bad number given where we're trading at the moment.
We saw this morning, Dr. Tulare, news breaking that Sipho Maseko is going to be stepping down as the Telkom CEO. The share price dipped just after that announcement. There is already speculation about who will be taking over. What kind of structure will the incoming CEO be moving forward with?
So look, I think Sipho Maseko is to leave his top job after 9 years. And, post this announcement, we did see the share price dropping around 4%. He will leave the company in June 22. But the process to appoint the successor apparently is well underway. And a group CEO designate will be announced in the not too distant future. This is what we've heard from the company. And for the remainder of his tenure, Sipho Maseko will ensure that the incoming CEO will be, properly handed over. But, I think it's been phenomenal success over the past 9 years that Sipho Maseko has been involved at Telkom. I mean, he sought to transform the business into a mobile and internet provider to obviously to offset the decline in its fixed line business that we have predominantly known Telkom for. He's also managed the restructuring of the partly owned state-owned enterprise, and we've seen the share price over the past 9 years increasing by more than threefold. So he's also even started implementing a number of deals that I think, the new successor will need to take over the baton and run with. And these also include things like splitting the company into different units, including a transaction that's related to the property and power division, which is Gyro, and obviously the sale of its fiber arm. So also remember that government owns 40% of Telkom, and they are obviously reviewing the portfolio of the data centers within Telkom. So there is still a lot on the go that the new CEO will have to, take over from Sipho Maseko in the next year.
Let's take a look at Twitter's advertising. Their revenue jumped up 87% from the year ago quarter. Can you take us through those numbers and what they can attribute this type of growth to?
Yeah, so quite an interesting set of data from Twitter. I mean, they've reported second quarter sales that obviously topped, our estimates, and they've given a forecast that the current quarter will exceed expectations amid, global events such as the Olympics that are currently taking place that will drive advertising. Post, these numbers, we've seen the share price rally about 7% in extended trading. They have mentioned that they've added 7 million new users in the second quarter from the previous period, bringing the company's total audience to over 200 million daily users. They have also mentioned the fact that, their U.S. audience fell about 1 million users to about 37 million people during the period that ended June 30. But if you remember, a year ago, already Twitter was facing one of its most difficult quarters when a lot of brand advertisers starting to pull out, marketing budgets at the heart of the coronavirus pandemic. But nonetheless, the social media company obviously relies on brands for the bulk of their advertising revenue, and they have said sales fell about 20% in the period from April to June last year. But they have said, look, as part of its new strategy to broaden its revenue, they are starting to push more aggressively into direct response advertising, which is the type of advert that will drive a specific outcome like an app installation or a website visit. But on the back of this news that we had earlier this morning, we've seen the share price reaching about $76. And that's obviously, quite a good number because we've seen also the share price increase about 28% just this year.
Well, thank you very much for this market update on this Friday. Much appreciated.